Hello everyone. Today is the 26th of February, so I wanted to record a new video on the bias formation, since I think it's an important topic, especially with the current market condition, but generally is one of the basic to develop a trading strategy. So before starting, make sure to like this video and to repost if you like this comment, and to follow me on all the channel. So bias is basically what will give you the direction of your trade. So once you form a bias, you will try to look trades on the direction of your bias, whatever is bullish or bearish. So it's let's say one of the core foundation on any trading strategy. You can have multiple bias according to the time frame. So you can have a bias on the daily, a bias on the weekly, a bias on the 4 hour, on the 1 hour, or whatever is your favorite time frame. Just make sure to always remember that high time frame bias is stronger than low time frame bias, simply because high time frame trends are more important than low time frame movement. So without further ado, I'll move to the chart and to some of the notes. I'll try to follow up on this quick video. So there are several ways of developing bias. ICT, trend traders, everybody have a different way to form a bias, but just make sure to form your bias before developing any trading setup or plan. For me, bias is formed mainly on two factors, and is the market structure and the support and resistance level. Then we will see the other slowly. But market structure is for sure a very important bias indicator whenever there is a trending market. So when there is a trending market, like we had, for example, in Bitcoin from August 2023 to March 2024, the bias here was of course bullish and was mainly simply monitored by any sort of market structure you want to give to this price action. This is the daily, but if you go on the lower time frame, you still would have a bullish structure on most of the time frame. When market structure become less relevant is during a ranging environment, like the one Bitcoin had, for example, here, but you can see many other charts. In this case, market structure is relevant, but become less important in terms of positioning, because even though here the market structure was bearish, we did have a bounce at around support. At that time, probably the support was this. We can play a little bit replay to explain what I'm trying to say. That in this specific chart, we did have a well-known support level. The market structure was bearish, but at around support is wise in a ranging environment to at least reevaluate or add confluence to your bias formation, also support and resistance level. In fact, the support then held, and from there price bounced back to resistance. Someone would have said that here the market structure would have turned once again bullishly, then probably after breaking this, but again resistance was stronger than the market structure and we did get a drop. Similarly, support sort of was deviated, went back, and we had a move higher. Probably from here we could have adapted our range according to the evolution of this market structure, and again around support, below support, the market structure was less relevant than the support and resistance level. So how you move within these two basic but still very important concept, market structure and support and resistance, you do evaluate the environment you are trading in, and you try to form a bias giving weight to the environment the price action is developing. What I mean, that I personally always consider both market structure, support as resistance, but the more the price action is trending like we have here, the less importance I give to support and resistance level. The more the price action is choppy like we had here, the more I give importance to support and resistance level, and the less importance I give to market structure level. So this is something not easy, that I make mistake, everybody will always make mistake, but it's something that you have to always consider whenever you are trying to form a bias for your trading strategy, plan, or setup. And you also have to evolve on your bias development and formation. So going back to market structure, always important to remember that market structure also is fractal. So we do have a high time frame market structure, and then we do have a low time frame market structure. And I do see many times people making confusion within the two. So what is important in consideration of market structure breaks. So you can anticipate breaks or breaks down, but you have always to be aware what is the leading market structure we do have. To giving an example, in this Bitcoin price action, probably the market structure was on the daily this one, then somehow we did have this one, then we have this one, arguably this was the low, then we did this high, this one, and this one. So all these little bounces never break the market structure. So here we did have a bounce, but we didn't break this high. Here we did have a bounce, but it never break this high. As you can see, all these high remain highs, and all this low continue to break down, break down, and break down. And this was the last one that was never broken down. Same with these highs. At the end, the last relevant lower high was this one that was finally broke here. But what happened, that in all these circumstances we have some temporary relief. In this case was this one, and then this one that started to move. But technically the only real market structure break, bullish market structure way we had in Bitcoin was here. So it was a bit late to be used to develop or form a trading setup. So you could have tried to long here, but let's say you were a bit out. So why the combination of support and resistance and market structure can help you? Because you could have longs set up on lower time frame market structure break, but you would have to consider what you were doing. So to give an example, twice here So the leading market structure here was this one and this one. So this was the last lower high, and this is the last lower low. So if you go on lower time frame, you will see that this market structure on the 4 hour somehow started to break down here. So we did have a low here, we started to form a little 4 hour market structure break after this break here, and we started to move to the upside. So context environment here become key. Why we don't care if this is happening here? So because we know we are in a downtrend. The downtrend at that time was more or less this one. We are in a downtrend, so somehow bias remain bearish, even if here we had a small market structure break, because we are far from support. So what we do, we add confluence, and we see that this market structure break that we are having in this part, they are happening actually at support. So this lower time frame in a daily bearish bias, daily downtrend or bearish market structure, we do start to have 4 hour market structure break, and these market structure break are happening at support. So you combine these two, and you expect, or you combine two confluence to say, okay, still is a downtrend on the daily, but this downtrend first will need to form some sort of, even accepting the fact that is a downtrend, we will need to form a lower low somewhere, and this was the lower low. This lower low is formed at around support. So should I see a 4 hour or a lower time frame market structure break, I can allow myself to develop a trading strategy based on the support. And what happened? You try to long any of these move somewhere on this market structure break, whatever is your strategy, you hide your stop loss below here, and first of all you start to develop your trading strategy on the range you are trading, because you always remember why you do what you are doing. You long support, so here you are aiming at resistance, so you are looking at this level. But you secondly have to remember that you are trading a downtrend. So in a downtrend you would not expect the market structure to be broken. What was our market structure? If this was the lower low, our market structure was this lower high here. So you try to be conservative and start to take profit before. Why? Anywhere below this level, because still this daily market structure is not broken. So we did broke the 4 hour, but we are not sure we will broke the daily. So you do develop a common strategy among support and resistance and the downtrend we are trading in. So if you would have taken profit anywhere below this low, you would have saved your trade. Now it's simple because I see the chart, but for example you could have traded the mid-range and take profit here, move, stop, it would be a profitable trade. You would never reach your resistance or edge level, but still you would be profitable. The same happen again in this range somewhere here, where we deviated back, come back, break the structure of the 4 hour, gave a retest and a little move to mid-range. The same happened here. And in this case, what happened? If you long at this support level, probably you would have stopped out or whatever, but whenever there was a 4 hour market structure break, the last one, you would have been done again something similar, long and somewhere here below this one, and this finally would have broken out. So to contextualize what is happening here on the current bias in Bitcoin, we can see similarly what is going on. And we do have a clear break in structure, so somehow here there was a daily structure that was holding, and then we started to break down. As you can see, this is still a valid high, so somehow you can say that the daily structure started somewhere here. Here we held. There was a temporary break here of all this low, but then again we broke above here. So in this case you start to see that daily market structure is not that reliable anymore, because we broke down, we broke up. So what is become more reliable? The range and the support and resistance level. That in our case is somewhere here and here. Then you will have people drawing support, resistance, range low, range line, many different levels, is normal. But let's go with the simple, the most touched level, that is around this level here. So now what we do have? We have a further breakdown in structure. So even this low here was violated. This is clearly going down, and now we violated again. So now the bias is definitely a bearish bias, that you can see it also here. So this, since forming this high here, is going down. So what are the boundaries now of this structure? Again, plenty of way to do it, but this was violated, so this become the low, the relevant low. Internally there is probably a lower high somewhere here, probably one here, but the real important one, it becomes this one. So whatever happened here inside this huge range, not actionable, not tradable, could still be a bearish trend. If we do like this, you see, this would still be a bearish trend. So anything below 108, you understand, is really not actionable. Whatever below this is still structurally, from the external part of this market structure, a bearish trend. So this is not actionable because it's very far. It's $20,000 above the current price. So you will not say, I will not ever long Bitcoin again until we don't break this structure bullishly. So it means that from here until we do this, that is a 23,000 or 20,000 K movement, you will not long Bitcoin. This will endanger your possibility of trading a possible range. So how you can trade Bitcoin here? Again, bias can be formed also in other way, in a higher time frame, but going back, for example, to this range. So wherever you see a formation, a lower time frame formation of a possible breaking structure, and something that resembles a reclaim of this support and resistance level. And here you can see that you start to have confluence, because somehow here in some low time frame there was an high formed. Probably if you look at here in the 1 hour, you see we did something like this, and then we break down. So you could say that here in some time frame there is a lower high, and if we break this lower high, we have an initial low time frame breaking structure, and you potentially try to enter in a potential higher low to look for a low time frame structure that start to do something like this. What is the confluence this little market structure will give you? Is the confluence of the support and resistance level we had from before. So as you can see here, there is a little market structure. This market structure aligns with this support level, and this will allow you to develop a bias on your trade. So here you have selected a low time frame level, that is the market structure, that aligns with a high time frame support and resistance level that allow you to form a bias. So here your bias is bearish because we are going down. Now you are waiting to see what is happening here and potentially form a bias. If we fail to break above here, you know that we are continue to go down probably in this level. If we break this above, probably you know that we have reclaimed support, we have broken some sort of low time frame price action, and potentially we can see a beginning of a relief. Then we don't know is a low high time frame relief that will bring us to resistance up here, or will bring us to break this high here and also give us a daily market structure break. But we move level by level, assumption to next assumption to next assumption. To break here, we need to break mid-range. To break this, let me do let you understand properly the concept, the movement you need. To break the market structure on the daily, we need to break resistance, so we have a confluence. To break resistance, we need to break mid-range. To break mid-range, we need to reclaim the support level. To reclaim the support level, we need to break some sort of 1 hour or whatever it is market structure break here. Failing this will also consequently making us to fail this and this. And we go step by step because we know that these are all trouble area that we created on the way down, and we have to create our bias and develop our bias as long as we move on this trajectory. So we do keep a bearish bias, but we know that even in the daily time frame we do have lower lows that can be traded in a bullish way, like this lower low here, or the lower low I show you down here, lower low, but still can be traded on a lower time frame, 1 hour or 4 hour, bullishly for this move, and then finally for this move here. So you are careful and you understand that you are trading a bearish downtrend, but still on the 1 hour, 4 hour, you can trade it bullishly if you see market structure break or support and resistance level that are starting to form. Just to adapt your expectation to the higher time frame bias you have developed. Similarly here, so we do have a range with some sort of support and resistance level. So here it's very clear, as long as we don't break this resistance to the upside, this remain a 1 hour lower high, and this can be broken. As long as we don't break this, probably we might also break this. So this range and the current market structure that looks something like this currently, we will need to be resolved one way or another. Whatever this range will be resolved, it will also imply on a possible resolution of break of this 1 hour downtrend or a continuation of this 1 hour trend. So you adapt your bias according to what support, resistance and market structure is giving. Here is very clear, we are failing to break this. So if you go in lower time frame, you will still see what is holding. This is giving you the hope in some time frame that we did have an initial breaking structure somewhere, and was somehow here probably in a lower time frame. But now we are failing to continue to break this. So you do understand that here there is a resistance level, the trend is a downtrend, maybe you longed something here because we did have this preliminary break here, a retest and a move here, but now you have to be cautious. So you are not targeting from here the resistance level here at 100k. You develop assumption. As long as we don't break this, there is nothing to trade above. Perhaps you can see this support level holding and then a move upside, but the environment is still not giving you sign that this will happen, so you have to be careful. The other tools that you can add to your bias are momentum indicator. So I will not enter too much, but you know that I'm using RSI, stochastic RSI, or whatever else. So somehow you have to understand that whenever you are in oversold or overbought territory and you are close to well-known support and resistance level, you start to develop but you start to be careful on your bias formation. So like what was happening here, we were going down, RSI was coming down, on the daily probably was very low down here. You see every time we reach this level we did get a bounce, we reach the oversold level, we get a bounce. So you can add this as a little confluence on what is more important here, support and resistance, considering that we are coming extreme level of RSI, or is more important the market structure. So to add a little confluence on your levels. And finally, but most importantly, bias should be one of the most adaptive or fluid concept in all your trading strategy. I lost my note. Why? Because if you are stubborn and you don't adapt quickly your bias, you will end up being in the wrong side of the trade. Personally, according to my journal, this is one of the most the biggest problem I have on my win rate. So having a wrong bias. You form a wrong bias, you hope the support hold and you try to long, but support is not holding and you're going down. So the bias formation should be a very, very big part of your planning and also journaling. And you should not focus on your ego because you did a post on X where you say you are bullish, you are bearish, or all this bullshit, but you have to be frank and honest with yourself and allow yourself to adapt your bias. So perhaps my bias here was that this support was going to hold. This support is technically right now not holding, so I have to be honest and frank with myself and say, okay, my bias here was wrong, this support is not holding, time to readapt my bias, restudy my bias and reevaluate what's happening. Bias formation and being stuck to a bias is what many ego trader fail to do, and it will cost you a lot of money. So keep reevaluating on weekly, daily basis according to what is your time frame, your bias, because this will allow you to be in the right side of the trend. So I will write again, I lost it, but first and most foremost, market structure, then whenever it is support and resistance level, and the two, as we said, should be move up or down on the scale of priority according to the sort of price action we are having. In a trend environment, market structure is of paramount importance. In ranges and sideways price action, support and resistance could move to the first spot. The third, we just mentioned it, but to keep in mind that we can earn momentum as a confluence. So overbought, oversold, loss of momentum, lack of volume, or whatever is you want to adapt. And the most important, adapt, re-evaluate regularly. So these are the 5 things you have to consider on your bias, or personally, these are the 4 things that I consider when I develop my bias. Other people can add news, fundamentals. So I'm bearish because there is an unlock, I'm bearish because of some news, or because earnings are coming out and all that stuff. Other people also use to form their bias sentiment. So you can follow or you can counter trade sentiment. You can add as much as you want, but as we explained in other video, make sure that your bias is not messed up. So if you add too many criteria to your bias formation, then you might end up in a very confused and messed up bias. I think that's it for this bias formation. As usually, if you have any question, please drop a DM and answer on this post. And again, make sure to follow me, to like and repost this content, so I know you like it, and I will try to make similar content in the future. Stay safe in the market and have fun. Bye bye.